Hey everybody, Economic Ninja here. I hope you're doing great. Got a great story about the auto industry out of businessinsider.com. It's entitled, "It's the Hardest Time in Recent History to Get a Car Loan." This is a story that proves that the auto market is in free fall right now, and it is going to get even bigger. Now, I am on location of our latest filming of our newest cars, Auto Trader Pro. I'm going to throw some pre-filming discounts. So it's $199, 80% off right now while we are working on this. We are at an amazing museum right now in Paso Robles, California. It's called the Woodland Auto Display at the Estrella Roarbridge Museum in Paso Robles, California. You've got to go check them out. I got to be honest with you, it's one of the best car collections I've ever seen in my life. Absolutely love it. But I came here to film this course because it's so vital that you understand the trends in the auto industry and why this time is literally unlike any other time in history when it comes to buying and selling vehicles and what is about to happen to the price of the average vehicles, let alone collectibles. Okay, so let's dive into the story. Again, out of businessinsider.com, the hardest time in recent history to get a car loan. It says here, car buyers are facing some of the highest interest rates and monthly car payments in history at a time that the rate of auto loan rejections is soaring. Since the start of the COVID pandemic, vehicle shoppers have been hit with a whirlwind, starting with low inventory, resulting in high prices for new and used vehicles. As inventory began to stabilize, sky-high interest rates came next. Now, many drivers looking for a new ride aren't able to get a loan, and more than 14% of them couldn't in June, according to the Federal Reserve. That's lower than the overall loan rejection rate of nearly 22%, but it's still up from 9% just 4 months earlier. Think about that jump from 9 to 22. And it marks the highest likelihood of auto loan rejection in recent history. The hike in rejections can be attributed to the overall macroeconomic climate and the fact that some drivers have more debt on their cars than the car itself is worth. Lenders may be worried about climbing balances and increasing delinquency rates, according to Experian. As of the first quarter, 1.89% of the loans were delinquent at 30 days, while 0.76% were delinquent at 60 days. Think about that. Right now, 1 out of 3 auto loans are late in the rears by 30 days. 1 in 7 right now are late 90 days. We are literally in the middle of a car apocalypse. The repo rates are at historic highs, yet you're not seeing this information really hitting the mainstream news. Why? Because when it does, and when the average consumer understands how bad this is, they're going to start running and the banks are going to take the hit. It says here, because of the overall banking environment, we're actually seeing a pullback from the banks on auto lending. This comes from Pat Ryan, CEO of car shopping resource Copilot. He said this in July. Meanwhile, consumers keep getting hammered by high interest rates and even higher monthly car payments in June. Average interest rates for new vehicle loans increased to 7.2%. Now, let's just stop there and say that I know that if you are my age or older, you know that this is normal. I mean, how many people put it down in the comment section, have paid literally 9, 10, 11% for an auto loan in their lifetime? As a matter of fact, we've also seen those rates in mortgages. But the problem is the consumer, the Gen X, the millennials, they are not used to these numbers, right? Gen Z, I mean, I'm all over the map. Point being is that so many people have been used to the Federal Reserve keeping rates ultra low due to 2 of the greatest economic tragedies in modern times, the dot-com boom and bust and the subsequent real estate boom and bust with the mortgage-backed securities. And so rates have been low and kept artificially low for so long. Now they cannot. Pandora's box has been open, Jack in the Box came spinning out, and guess what? It's Jerome Powell saying, we're raising rates. That's what's happening, and it is going to put more continued downward pressure on the auto market. It says here, meanwhile, consumers keep getting hammered with the high interest rates and even higher monthly car payments. In June, average interest rates, like I was saying, hit 7.2%, while they increased to 11% for used vehicle loans, according to auto buying firm Edmunds. And the average monthly car payment reached a record high of $733. That's the average in the second quarter this year, with more than 17% of consumers paying more than $1,000 a month. Per Edmunds, buyers need helpful loans more than ever. Copilot's Ryan noted it's especially true for used cars, and the factors like student loan payments are having an effect on the environment too. The availability of consumer credit in the used market is going to feel tighter in a way it doesn't in the new market, Ryan said. Now, the new student loan payments are required again. that part of the market is likely to put pressure on delinquencies, and we'll see an increase in delinquencies, which will make lending tougher. Think about that. For the first time in history, we had a whole segment of loans that people were allowed to not pay for years, and now the student loan repayment has to start between September and October, and you are going to see so many people that have car payments are not going to be able to make those car payments. Why? They got to make those student loans. Why? Because that's the only type of debt that is not dischargeable during or through a bankruptcy filing. Guys, this is a big deal. The auto market is in for some very tumultuous times. Now, with that being said, if you're an auto fan like me, you got to get down here to wine country in Paso Robles, California. Come check out the Estrella Warbird Museum, check out the Woodland Auto Display, and think about when you walk through these cars and you start to look and just think of this. Which one of these bad boys am I going to pick up for pennies on the dollar? From hands, weak hands. Now, the people that own these, strong hands. You want to be able to find the weak hands and get your dream car. I can't wait. I'm going to put some 80% discount links to the Auto Trader Pro course down below. It'll be the lowest price we've ever charged. And thank you so much again to Estrella Warbird Museum for letting us film here. With that being said, guys, the Economic Ninja is out.